Hello once again. Thank you for joining me for another brschultzSP500 timing episode where I time the S&P 500 on YouTube using my own models. I've got about, a dozen or so. So I want to provide you with an update. Looks like the model went 7 for 7 with strength into the February 11th projected peak window. The 11th and 12th had a plus or minus half a business day because I kind of try to keep it to a 3 business day window. So we double tapped it up there at 60.75 roughly on SPX 500 USD on tradingview.com, the 24-hour contract for the S&P 500. So we got a double tap on that. That's pretty nice. Confirmed it twice. Twice is nice. And so it looks like the model went 747 for the strength into this time frame. That was predicted by that little squiggly line. And on my blog, I asked if, the big fish could thwart the model's little squiggly line of 3 touch points out to roughly February 11th or 12th for some type of strength peak into that time frame. Looks like they couldn't. So that's where I put my plug in that historical data determines the future. Not the big fish. They may try to rig the game as much as possible. But as you know, my motto is historical data determines the future. Now I've been relentless this year in trying to show you different models that prove that. Okay, so call number 7 looks like it's hitting. I went all in short between yesterday and today. I had a little bit of cash clear up this morning on a trade I made the other day, so I put that back to work in a short position. So now I'm like 98% short, maybe even 100%. I think I've used almost every dime I have short here. And then the macro bottom, the final bottom, will be March 21st. Now, those of you who know how markets work, the macro bottom is not the lowest low. Normally, wave 3 of that move will be the lowest low. That could happen near the end of February. It could happen the Friday before the Fed week, right? Because Fed week is usually pretty boring. So that's usually like middle of March. And so that could be very boring, right? That could kill any type of puts you have. So you want to know where the final bottom is. Well, today I want to show you where I believe one of the worst parts of the storm is going to be. I think it's going to be around February 24th. So this is kind of an update to the previous video. I'll try to keep it shorter on some of the other slides, obviously. But I think the 24th, something bad's going to happen over the weekend following up to the 24th. Some type of trade war, whatever, tariffs. China says something about jacking up tariffs on the U.S. or, another country has some type of trade dispute or whatnot, and then futures will collapse of some sort, it looks like. And I want to show you why. So February 24th could be one of the worst points in the drop into March 21st, which is interesting because it's almost exactly a month before March 21st. So maybe that's wave 3 down. It would seem quite odd for that to happen. I would tend to think that February 24th would be like a wave 1 down. So that's kind of my guess. Maybe the Fed tanks the markets into roughly February 24th. And I think that could be wave 1 down of the macro 5-wave move into the March 21st timeframe. And again, wave 3 would be the worst part of the storm. That'd be where I'm looking to get out of my puts. And my shorts would be the wave 3. So it will not be March 21st. Where I'd want to put in maybe my more long-term investments like my 401k and things would be around March 21st, because I think that's when all the turbulence in the market will be at its last point. So that's where I'm personally, I'm not a financial advisor in any way, shape, or form, but me personally, I put my 401k back to work around March 21st. I think there could be one last drop around there, and then that's where I kind of want to start thinking long-term. So, in a nutshell, that is the elevator speech. Let's dive into the models. Thank you for joining me today. If you haven't subscribed, please do. As the subscribership grows and grows and grows, then I can add more material into my slides, because then donations usually pick up. And hopefully there's a huge donation at the end of March if my prediction of a giant collapse in markets comes true. So let's jump into the models. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. Okay, so we saw the markets drop on February 7th as predicted, right? And then, you know, when you go into a weekend and you see a big market drop and the market doesn't pick back up later in the day, you kind of get worried that Monday could fall off a cliff, right? Natural human tendency, where that's where that's when I went long. And some people on the YouTube channel questioned why I would go long, and I said you need to listen to the videos. You need to understand the 70-point swings, the BRschultzSP500 70-point swing rule, and it dropped 70 points, 77 points on Friday, and that's why I went long, and then it jumped 70 points from that bottom, right? So then that's where I went short on the macro scale, up here at 60, 70, 60, 74. I did the majority of my shorting at 60.74 on SPX 500 USD on tradingview.com. You can go there and check that out for the 24-hour contract of the E-minis, SP500 futures, blah, blah, blah. I'm not a financial professional, so if I do misspeak, please forgive me. And please understand that I am not a professional. I'm not trying to be highly technical in my verbiage for things that are financially related, but more or less I'm trying to be very technical about the model, because that's where I put my skills to work. That's what I've studied for countless hours over the past decade and a half. So anyways, you can see this model is a 10-minute model. You can see the 1, 2, 3, 4, big 4 count out to roughly February 11th, right where we're at, saying we're at the macro peak. So I'll keep it short. This is the 10-minute model, so I'm looking more for a macro peak here, right? The 10-minute model is more my macro scale peak model or bottom model. And this is the peak setting. That's what's red. It says peak model. It's in pink red there. And then a red arrow kind of denotes also that it's a peak. So again, the emphasis is on some type of macro peak here because this has such a beautiful pattern. So let's move on to the next graph. So this is what you saw originally, the 20-second peak model, one of my favorite second opinion models. You can see that roughly that little dark blue line in the background was last updated around February 3rd, and at that time I could see that there would be some type of peak even around February 11th, which is today. And that's when futures raced back up and tagged the same levels they did yesterday. Right? So spot on, Johnny, spot on. So anyways, we saw the markets pop back up here, and this is the little squiggly line that on my blog I said I wonder if the big fish are so powerful, surely they can stop this little squiggle on this graph. You know, it looks like I just drew it with a dark burgundy marker. 3 touch points, right? Just some little silly squiggle. Surely they can stop the market from jumping up on February 11th. No, they couldn't. They could not stop it. Not with all the money in the world, they couldn't. Because I believe that historical data determines the future. And sure enough, that's what happened. We saw markets jump back up to the highs today. And the reason why I shorted around 60.74 yesterday was because we're right around 6,100, right? The market doesn't like to go past 6,100 for whatever reason. So I said, you know, am I going to complain about 25 points? Really? No, I'd rather be a little bit early than a little bit late. If you're a little bit late, sometimes the market's already down 200 points, right? So if there's going to be like a 7%, 10% correction here into mid-late March, I have to be a touch early, and 20 points to me, I could risk 20 points. So at least that's what I was thinking at the time. You know, time will tell if I was correct. But that's what I was thinking at the time. So I don't think that, Goldman Sachs and their crew had a better algo than mine. It doesn't seem that they could outsmart it or outmove it. They couldn't find a way to outmaneuver it. So the MJ model continues to be amazing. So let's move on to why I believe that February 24th will be some type of major low in markets. Okay, if you watched the last video, you kind of know that I tried to draw this trend. Maybe it's not the exact same trend. Maybe it's a little different, or maybe it's a different trend. I don't really remember. I know it's something very similar on the gold wave. But what I found very interesting is this little 1-2 touch point for what picked February 3rd, right? How did the model pick February 3rd? Seriously, a 1-2 touch point picked February 3rd. And it collapsed the markets on February 3rd. Now, if you remember, I had originally on one of my other model that has 3 touch points, the peak model, so they're different algos. I have different programming for each, the bottom and the peak algo. But it was looking for a peak around February 3rd. And as anyone knows markets, it is extremely hard to pick a peak and a bottom on almost the exact same day or 2 days apart, right? Within trading days of each other, one trading day of each other. Think about that. That's near impossible, right? So if you followed me on my blog, if you listened to my video on January 31st, you might remember that I went short that morning. And February 3rd, I woke up and markets were a complete disaster. Amazing, right? Well, this gold wave picked that, so it would seem. So it's when I first saw it, it didn't make sense to me, right? Because you wouldn't think, oh, it's picking a peak and a bottom. It doesn't make any sense, right? It seemed like it'd be conflicting with each other. But honestly, it was actually telling me that there's going to be a peak and then a monster crash. I just couldn't see it. And usually I need 3 touch points, not 2. Nonetheless, hopefully I've learned my lesson. If you take the lowest point on the gold wave and the highest point, it's creating some type of maximized turbulence at the end. So you apply that same logic here. Similar logic, maybe I might say, and you're getting roughly February 24th. Now, I do know that there's a President's Day or whatever is on February 17th, thanks to a YouTube subscriber who pointed that out to me. So it might be the 25th, right? 24th, 25th. Either way, doesn't really matter at this point because today's February 11th, so it's like 2 weeks away. That doesn't really matter to me. But what's important to me is that if it has the same effect, markets somehow crash and hit a lowest low around February 24th or 5th, that might be a significant point for me to exit my shorts, okay? So whatever happens around that date, I expect a very substantial sell-off. Not only that, but then you see the Jaws trends underneath the purple wave in red and yellow going out to that exact same day too. So to me, there's some type of massive capitulation on the downside around the 24th or 25th. And so that's where I would plan to exit my shorts, and I'd imagine there'd be some type of reflexive move upwards, and obviously I'll have to stay posted, but my macro call, my number 8 macro call is going to be March 21st, let's say. It might change slightly as I get closer, right, for the final bottom. But I think that this February 24th or 25th will be a very important point at which I will heavily consider exiting my shorts and then letting the market pop and then choosing to re-short maybe a day later, maybe 2 days later, maybe 3 days later, right? So it usually gets like a 3-day window where markets somehow gain steam, and then obviously be looking at my peak models at that point, trying to figure out where the peak is. But I just want to give you, this is quite interesting, right? Because the 1-2 touch point somehow created the monster down flush in markets on February 3rd. And so this could happen all over again on roughly February 24th or 25th. So we have about 27 trading days until the macro bottom in markets, I believe, on roughly, again, March 21st. So I think that's really all I have for today. So I want to keep it short. Thank you so much for joining me. Again, this is not an official call for February 24th or 5th. It's more or less just pointing out what I'm considering for exiting my shorts at that point, because I think something very bad is going to happen over that weekend, and then markets collapse over the weekend is my guess. All right, thank you for joining me. I'm Barry Schultz. Until next time, you can watch the following slides if you want. I've kept them in the reel, the slide deck every week, just to keep that March 21st in everyone's mind. I know a lot of people don't listen to what I say. They don't hear what I say. It's unfortunate because I say the same things over and over again, and people still question me, and that's how I can tell they don't watch the video. So for those of you who do, thank you so much. If you haven't donated, please do. If you love my work and you're just giddy with my work, you can always throw me $7.77 or $34, $23, $77, $777. Thank you so much for the individual that sent me a donation of roughly $1,500 on Super Bowl Sunday. Very much appreciate that. That blew me away, made me want to cry like a little baby. Get back in there, tier. If you watch Cloudy with a Chance of Meatballs 2, you know exactly where that line's coming from. But yeah, that was really an awesome donation. Thank you so much. And obviously you said that there's plenty more to come if March plays out the way we think it's going to play out. So this is for the audience. Hopefully you enjoy that. This could be very much an exit point for the upcoming over the long term of the massive correction. This may be a very significant bottom on the road to the March 21st macro bottom. So I don't really have a price target per se, but more or less you can just see that the swing point is in the gold wave, and yeah, go from there. So I thank you so much for your time, and hopefully you have a wonderful time, and I'll probably get a video back out to you probably around the 20th, I'm guessing, right around maybe a couple days before this next swing point is kind of, at least in the least, I would like to get you a video by then. If I don't create one sooner, blah blah blah, that will be my target date. Thank you so much for watching. I'm B.R. Schultz. Until next time, take care. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, B.R. Schultz SP500, systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast.
Forecast.
Use
only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
a licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.